easy to put unlimited cash back into your business each month.
We know what you want. That's why we're open. How American Express serves small business.
This Friday, Star Wars arrives with The Phantom Menace at 8, Attack of the Clones Saturday, and on Sunday, the world broadcast premiere of Revenge of the Sith. Star Wars starts Friday exclusively on Spike.
Fast, accurate, actionable, unbiased. CNBC.
Welcome back. If you're just joining us, a pretty good rally underway on Wall Street to begin the second quarter. The Dow had been up about 305 points at its peak. Now a gain of 292 points, about 2.33%. And the Nasdaq's even stronger, a gain of 57 points right now, or 2.5%. You know, there was a piece on the front page of the Journal this morning about Americans maybe having to delay their retirement, putting it on the back burner as their nest eggs shrink because of the slowdown in the economy or housing or whatever. But today, that's certainly not happening. And joining us to try and make sense of what the safer sectors might be for those boomers, we get Andrew Burkly, who's a market strategist at Brothers Harriman, and Bill Spiropoulos, who's Chief Executive Officer at Corestates Capital Advisors. Good to see you both. Thanks for joining us today.
Hey, Bill.
Bill, what do you make, first of all, of this rally? This is just a good old-fashioned let's start the quarter off right kind of a rally, or what's going on here?
No. It goes far deeper than that. We've had the Super Bear schoolboys scaring the daylights out of the public. Cash is at huge levels, shorts are at record levels, and panic has been the primary flavor out there. I've never seen such a stiff environment in my 30 years. If you ask me, I think this was just something that's been long overdue. There's compelling values, and the smart money's putting it to work.
What do you think, Andrew?
Yeah, Bill, I would tend to agree with that. I mean, I think we've seen the correction for the year. We think the lows are probably in here, and it looks like people are starting to get a little more aggressive on a day like today. Certainly shows you that you want to have an allocation leaning towards equities. You don't want to get more defensive here at this point.
Hey, Bill, tell us your safe sectors that baby boomers should be thinking about.
Well, I think that before you look at sectors, you have to look at the big picture. And if your retirement plans are contingent on selling something or selling your house, you got to go back to the drawing board and fire your advisor and get somebody else. Once your house is in order and you have capital that can be deployed in risk positions, then by God, follow the lead of the smart boys. Look at Harvard, Yale, the endowment world. What people need today is a 8-cylinder financial engine. That's stocks, bonds, cash, real estate, the biggest market in the world, currencies, the energy complex.
So for you, it's a diversification along asset classes, not just putting in a diversified stock portfolio.
Absolutely. The correlation between stocks and currency is 4%. So if the stock market's down, there's a high probability that you'll do well in the currency space.
Okay, and Andy, even though we're talking about how investors can make themselves safer, you actually feel it's time, the producer notes here say, to get more aggressive in buying stocks. Why is that?
Well, I mean, if you look at the end of the first quarter, we saw there's about $100 billion outflow from U.S. equity mutual funds. That's very typical at the end of bear markets, where you see people just want to cash out. They want to get out of the way. It's very similar to what we saw at the October 2002 bear market low. So, what we would be advising is you want to kind of lean against that feeling of gloom and despair. You actually want to look for some value in the stock market here, and we think there are some interesting areas.
Rattle off 3 sectors.
Energy being the top one. We think any diversified portfolio should definitely be overweight in energy. We look at consumer discretionary as kind of an early cycle play, and even select financials. I think there's some good value there too.
Okay. Hey, Bill, for the last 3 months, everybody comes on and says consumer staples, and I think now we just heard Andy talk about discretionary. What about staples?
Well, I like any multinational consumer company that's non-cyclical. I think they're attractive. With the dollar where it is, they're going to do very well over the next couple of years.
Okay.
And I think that is a must-have.
And why no more tech? Oh, all right.
Well, why no more technology at this point?
Well, that's a little too volatile and cyclical for most people, including me.
It wouldn't be what you would call a safe sector. That would be the reason for that.
And the values are compelling at these levels.
Yeah. Good to see you both. Thanks for joining us today, Andrew and Bill. Appreciate it very much.
Anytime.
Straight ahead, Bob Pisani will join us live from the New York Stock Exchange. Get the latest there. And it's the shorts versus Wall Street. Some